Hello guys, swing for peeps here, swing daddy in the house. And how is the week going? Today is the second day of the third week. This is third week of May. So I just want to run us through a trade I took recently, and I want us to, you know, learn some lessons from what transpired before the trade, during the trade, and after the trade. Okay, because there's always a before, a during, and after the trade. So this is a trade I took actually on NZDJPY. All right, so been holding this trade for a while now because I actually took this trade from the monthly time frame. Okay, now I want to walk you through a process of awareness. Okay, a process of respecting every element of of technical analysis. Okay, in which let me put it like this: just don't kind of stay in your own lane or stay in your own world or in your own bubble such that you actually ignore what others are saying. Yes, I've always emphasized the importance of deafening your ear to the noise of the market. Okay, find solitude, find your style, stay within your lane, okay, and then master your strategy, stick to your trading plan and all that, which is what most experienced mentors and those who have been in the market will actually advise you to do over time. However, we have to strike a balance, you see. What am I trying to say? That look, that the fact that okay, you're a supply and demand trader doesn't mean that you completely ignore signals that are coming from the angle of SMC or from the angle of Elliott wave or retail trading or pattern recognition and ICT. Okay, when you hear concept like liquidity, you hear concept like support and resistance. Yes, they may not directly apply to supply and demand trading as it is because supply and demand trading is a style of its own. However, all right, it makes sense that you actually have an idea of every part of other strategy. Okay, have an idea of what the strategies are. You have to have an idea of what SMC is, even though you're not trading SMC. Have an idea of what ICC is. Have an idea of what the fundamentals are saying, even though you're not a fundamental trader, even though you're a technical trader. Like I always advise, yes, keep your eyes on the fundamentals because you must always keep your eyes on the basic, which is the fundamentals. The fundamentals is why we are here. However, our telescope is a technical telescope. So I think walking you through an example will further buttress my point as what I'm trying to pass along. Okay, so this is a trade I took. That was a while back. I think coming from April or so into the month of May. So this is what happened. Okay, now we did an analysis. All right, I'll walk you through the analysis step by step. Now we did the analysis from the monthly time frame. Okay, we established that this here is totally bullish. All right, actually in a bullish consolidation on the monthly time frame. Bullish consolidation. Okay. Now, how did I enter this trade? I actually took the whole of this area. I took the whole of this area as a buy. All right. I took the whole of this area as a buy. Okay. You know that here in Swing for Pips, our minimum risk to reward is actually the target of 1 to 3. That's the minimum we actually go for. However, I had a play in mind. Okay. So as at then, okay, the market was somewhere around there. Can you see this pin bar right here? Can you see this pin bar? This pin bar right here. Okay. Before it finished its formation, all right, it came into an area around here. I'll take you to the weekly to show you how I actually entered this trade here. So when I saw this rejection, I think when price got back to around this area, I went into the trade. Okay. So giving us a very good risk to reward ratio. All right. So our target was actually targeting this high right here. All right. This all-time high. Okay. So what I was looking at was this, that okay, price will come into this supply zone right here. If at all we are going to be getting out of the market from the monthly time frame all the way to this point here. So now this is what happened. All right. So now two things: the market was bullish on the monthly, and then we had this demand zone that was in control. All right, and then we had this pin bar formation forming. Actually, it was forming then. Okay, but I already had an inclination that okay, probably by the close of the month of April, we'll have a bullish pin by a bullish rejection. Okay, so we established on the monthly that this is a buy trade. Okay, so we came down to the weekly, all right. So this was actually the fine tuning. We came down to the weekly, all right. So we had a nested zone in the weekly time frame, which was around here. Okay, all right. So that's how we're able to reduce our entry point from this point right here on the monthly all the way to this point here. Okay, we had this. So when we had this rejection, when I saw this rejection, okay, yeah, exactly. Now this is it. When I saw, can you see this bearish engulfing pattern? All right, this is a bearish engulfing candle. All right, this bearish ERC candle. When I saw it having this rejection, it closed as a weekly candle. So we got in here. We got in at this point here, right here. Okay, we got in at this point right here. All right. So there's supposed to be a very long swing trade since we took it from the weekly. All right. So now this is what happened. Now I'm trying to bring your attention to something that look, yes, all our tactics of entering this trade was actually from the perspective of supply and demand. Now I want to show you why you should respect other forms of other style of trading. All right, even though you're not trading them, but when you see those things that are identical, that has been prioritized in other strategy, you have to pay attention to them. Okay, for instance, now if the fundamental is saying otherwise and the technical is saying otherwise, I have to respect myself and wait for when they are speaking the same language before I go into the market. All right, without much further ado, this is what I'm trying to say. Now, price took off from here. So week one we were bearish, we were bullish. Week 2, week 3, week 4, all right, week 5, week 6, for about 6 weeks, all right. Price was giving us some good pips going to the upside. And then we actually had other trades in the sister pairs like the JPY pair, we had CHF JPY. Yeah, CHF JPY. So we had NZDJPY, pounds JPY, and CHF JPY. All right, we all had a buy position on them. All right, but I actually want to use this particular pair to break it down for you. So this is what happened. All right, so now we kept holding the trade, and there was something we didn't pay attention to. We just wanted to, my eye was actually on this turning point right here. Actually, so this was supposed to be a good 3-to-1. This is actually almost a 3-to-1 already. Let me see. Yeah, at this point here. Okay, this was, we're almost at 3-to-1, but of course, like I said, our target minimum is ratio 1-to-3. That's 1 risk and 3 reward. Okay, so this was what we were targeting. We were targeting actually here, around here, to get out around here. Okay, around this point here, we're actually targeting that point there. I could recall. Okay, because on the weekly, I remember on the weekly we had something like this right here. We have something like this right here on the weekly. So we are expecting price to come all the way to this point right here. Okay, that's this zone here. Okay, we wanted price to come and at least get to this zone before we get out of the market. And also we actually had another TP at this point right here. Okay, so now what we'll have done in terms of managing our trade, we actually ignore a fundamental element, which was coming from the point of retail trading and pattern recognition. What was that? All right. So remember we took our trade from here, from this point here. This is the daily time. This go down to the daily time frame. Okay. All right. So now this is what happened. We actually ignored a particular detail because I felt like, well, my eyes did not catch it. It is in my habit to actually look at things like liquidity, support and resistance, while the trend is going my way, why price is going my way. All right, why price is going according to my analysis, rather. Okay, this is what happened. Let me take us back to the weekly. Yeah, this is where I missed it. Okay, now price had done this. Can we see this? I need to show you something here. Aha, just right there. Okay, right there. All right. We actually ignored this place totally. This was a key resistance zone by supply and demand. By support and resistance. Okay. Can you look at all these points here? So this was a very, very strong and active supply and resistance area. Okay. Can we see the way price actually played around here? Here, 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 and here. So traders, count along with me. Just count along with me. Let me show you something. This is 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13. So in fact, I think this is the most active zone so far on the whole of this chart right here on the NZDJPY. Okay, so my eyes did not catch this until when I came back for another analysis and that weekly outlook, and then I saw this, and I saw why price was actually reacting of this point. So what I did was that to respect myself, I just took what I could take out of the market because this is the very, very stubborn zone right here. This zone that I just marked out, this support and resistance zone. Okay, so see what price did. Here it was resistance, 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 resistance. It broke, came down, resistance. Here it became support. Support here, support here, support here, support here, support here, resistance here again. Okay, so there's the potential of price to actually come all the way down here. Okay, before maybe either going up, you never know. All right, but price have the potential of coming back all the way to the bottom here, even probably coming to break here because this is a very stubborn zone on the weekly time frame. Okay, so yes, for instance, even though let me say, okay, for instance, you're a support and resistance trader, all right, or a pattern recognition trader, all right. If you see a solid, if you don't have an idea of what supply and demand is, all right, and let me say price is going according to analysis, you're making profits, okay, and you don't pay attention to, and let me say as price is going upwards, maybe price took off from your support zone, all right, going upward, and there's this strong weekly supply zone opposing price. Okay, if you don't respect that supply zone, you are going to lose your profits on that trade. You are going to lose your profit on that trade. You may not actually close your trade, all right. But what you want to do is manage your risks, manage your profits, manage your exit. Do you understand? So what did I do here? When I saw price doing this, let me take out all this annotation. All right. When I saw this strong rejection here, that was what actually drew my attention to this support and resistance zone right there. All right, and I was like, wow, okay, I have to be careful here. So what I did here was to tighten my stop loss, took out some profits, and let's see what the market have for us. If the market should say, okay, after reacting on this zone, all right, and probably come here. If it comes, for instance, I'm actually looking at the market to come to this point here, this demand zone right here. I'm looking at the market to come to this demand zone right here on the daily. Okay, probably, okay, so took out some profits and maybe price may give us another entry right here. Okay, before going to the upside. Okay, and let's not forget, okay, our analysis for NZDJPY is actually bullish. The monthly is bullish, the weekly is bullish, the daily is bullish, and the 4-hour is bullish. All right. I think for those of us that have been following, all right, for those of us that have been following, we can see that this is our analysis that we did recently. You can see this. Can you see this? This is NZDJPY. All right. Monthly is long, weekly is long, daily is long, 4-hour is long. So our bias actually to the upside. But because we are so engrossed in supply and demand analysis, all right, I kind of ignored. I won't say I ignored, but later caught my eye actually. So that's how I was able to like, okay, it's time to like get out of this market. All right. On the other hand, I'll wait to this point here. All right. I'm still holding this trade though. All right. So when price gets to this point, I'll look for some entry reasons. Okay. And then before going to the upside. So guys, there you have it. All right. So let me, buttress the point some more by saying that, look, yes, you're a supply and demand trader, all right, but please pay attention to other trading styles. You don't have to know them in totality. Of course, the thing is that you cannot know all the strategy. You cannot actually say you want to trade all the strategies. No, okay. It is like, when you are in school, there are many. You have, let me say, okay, your 100 level, you have like, in a particular course, you have, let me say, 12 syllabus of a particular course for that for that um for that semester. Okay, and then let me say you're also doing 9 courses, so there's diversification across the semester. All right, so SMC, ICT, support and resistance, supply and demand, Elliott wave, sorry, Fibonacci, fundamentals. So these are so you have to it's a package. It's an all encompassing package that you have to know about every item of that package. All right, your style to approaching the market may just be supply and demand, but please, all right, pay attention to other style of trading because they will save you a lot. I'm a supply and demand trader, yes, but if I see a head and shoulder pattern on a weekly time frame, I give it its respect. I give it its due respect. Okay, if there's supply, if there's if there's a pin bar, for instance, okay, supply and demand trader, yes, all right, but if you look on the monthly, look at this pin bar on the monthly. I have to respect the pin bar. This pin bar informs me that yes, the market is going to push upward. All right, that's retail trading. Pin bar, bullish engulfing, and the like. All right, we have to respect that. So what am I trying to say? Pay attention to other trading styles because they are going to save you a bunch. All right. For instance, I pay attention to the fundamentals a lot. Okay. For instance, now talking about the fundamentals, even though yes, the DXY, that's the dollar index, have been giving us some bullish energy. All right. But I know that long term, the dollar is bearish. I don't have any business holding the dollar for a long time. All right. Maybe for some quick scalp or something to the upside. But overall, my stand with the US dollar is bearish. All right. So, guys, there you have it. Okay. You have to be an all rounder in this market. All right. Respect every corner of the market, even though you're not going to trade all, but have an idea of what other traders, that's other style of trading is saying. So, I hope you've gotten something from this brief session. All right. Stay profitable this week. Stay open-minded. All right. Keep your eyes on the fundamentals. Keep your eyes on the technicals and be an all-rounder. Okay. Continue to have a blessed week and continue to have a peaceful week. A peaceful week. See you some other time. Bye for now.